This is a demonstration of exercise 2312B, Statement of Cash Flows using the direct method. Condensed financial data of Fulton Corporation for 2020 and 2019 are presented below, and the problem asks us to prepare a statement of cash flows using the direct method. So we have the 2020 and 2019 balances for the assets, liabilities, and stockholders' equity. We have a column that shows the change in the accounts from 19 and 20 and some adjustments that we will have to make. And then the problem gives us the income statement for the year ended December 31st, 2020. So for this problem, we are going to be using the direct method for the operating activities section that will show cash received from customers and cash payments to derive or determine the net cash provided by operating activities. And then we will complete the statement with the cash flows from investing and financing activities and show the net increase in cash. And we also have a non-cash investing and financing activity to list. So to help prepare the statement, I have set up at the bottom of the spreadsheet the computations that we'll be using to adjust the income statement to determine the cash received and paid. So the first item that we are going to start with is going to be sales, as shown on the income statement of $15,200. We have to adjust the sales for the increase in accounts receivable. The comparative balance sheet showed that accounts receivable increased by $150 from 19 to 20. So we know that that has to be subtracted from sales to determine cash received from customers. The next item that needs to be adjusted on the income statement is cost of goods sold. Cost of goods sold is shown as $10,400. The comparative balance sheet showed that inventory increased by $400 from 19 to 20, so that is an additional cash that has been spent for inventory that would not be included in cost of goods sold. And also, the comparative balance sheet showed that we had a decrease in accounts payable of $450, which means that cost of goods sold, we had an additional $450 spent in addition to what was shown as an expense in cost of goods sold. Next, we go to the selling and administrative expenses, which the income statement list is $1,205. If you notice, depreciation expense is not shown separately on the income statement, so it would be included then in the selling and administrative expenses, and we know that that is a non-cash expense. So we're going to subtract the increase in accumulated depreciation that was shown on the comparative balance sheet to remove the depreciation expense. Accrued liabilities would also be associated with selling and administrative expenses, and the comparative balance sheet showed that it decreased by $190, so that would actually be an additional cash payment that was made in addition to the expenses shown on the income statement. Next, we see on the income statement that there was a loss on the sale of an investment. So when there is a loss, we know that our proceeds that we received from the sale of these investments was less than the change. So the change in short-term investments shown on the comparative balance sheet was $200. But if we had a loss on the sale, that means we actually only received $150 in cash. So we need to adjust that. Also, the comparative balance sheet showed that the plant assets changed by $400. But the problem tells us that during the year, $100 of common stock was issued in exchange for land. So that would mean that $100 of that increase in plant assets did not involve the payment of cash, so we would need to subtract that amount to determine the actual amount of cash that was paid to purchase plant assets. Also, if you notice on the income statement, we had income tax expense of $1,400 and cash dividends of $600, and there was no adjusting amount for those because there was no account shown on the comparative balance sheet. So we'll just be subtracting those total amounts at the top. So now when we go back up to the top to the actual cash flow statement, you'll see that many of the amounts have been completed based on the computations that we made at the bottom. We now have our total cash received from customers of $15,050. We have our cash payments to our suppliers and for our operating expenses already completed from the bottom. But we do need to subtract that $1,400 of income tax expense. And again, there was no income tax payable shown. So now we had our total for our cash payments of $13,900, which we would subtract from the $15,050 to give us net cash provided by operating activities of $1,150. We have our cash provided from the sales of the short-term investments from the bottom of $150, and we have the purchase of plant assets from the bottom of $300. So we have net cash used by investing activities of $150. Next, we need to complete the cash flows from financing activities. When we look at the comparative balance sheet, we notice that bonds payable decreased by $200. So that means we redeemed $200 of our bonds. We also noted on the income statement that we had paid $600 in dividends. There's no dividends payable account, so we know that amount would actually have been spent. So we have total net cash used by financing activities of $800. So we take the $1,150 and we subtract the $150 used by investing activities and the $800 used by financing, and that gives us a net increase in cash of $200, which does reconcile to the change in cash between the 2 years. We add the beginning cash balance from the previous year at January 1st, 2020 of $600, and that gives us our ending cash balance at the end of 2020 of $800. And then we have one item that we need to list as our non-cash investing and financing activity, and that was the exchange of the $100 of capital stock for the plant assets. So we would list that as issuance of common stock for land at $100. And that is the conclusion of the demonstration for exercise 2312B.